lenders would hate me to say that. If you've not signed on trade premises, you could just walk away from the agreement. It's unenforceable.
I could be signing my life away into a non-regulated, interest all up front. I would not know.
The horror stories, some people have been put in non-regulated deals where all the interest is front-loaded on day one and they don't get anything back. That hurts. That is painful.
Done it once, being involved in negative equity, I just had my pants pulled down kind of thing.
If you want to settle after 12 months and you've got 4 years worth of interest, boom, yeah, forget it.
I want to twist that on its head and ask, if that was me and I've just lost 300 grand because they've said company's gone bust, how does that work with finance?
I think if we rewind about what's happened originally, I think that the truth of this is...
So, something new and exciting here at Gravity. We are trialing a new podcast style setup. Now, for the first podcast, it's actually really exciting. We have someone that is super knowledgeable in a field that I have nothing, no idea about. Our good friend Tim from Magnitude Finance. Tim, I'll be honest, I have so many questions to ask.
I've seen the list.
Yeah, a lot of you at home have sent in questions, which is really exciting. We can go through them and get as many answered as possible. But this is just a real different vibe for us. We want to be able to educate and answer as many questions for you guys at home as much as possible. And yeah, just in a real chill environment. So without further ado, let's get into it. And get all your questions answered.
Sounds good. First of all, thank you for having me down here.
Yes.
Great to see everything in person. And
thank you
the
for
cars
coming down.
and the backdrop as well.
4-hour drive. A 4-hour drive for this man. Which
brought the Yorkshire weather with me as well, so I'm glad we're indoors.
is good commitment from you. I'll give you that. But yeah, like I say, thanks for coming down. Magnitude Finance. Obviously, you're one of the owners of Magnitude Finance. Just as a little background, I mean, where did Magnitude come from? When did it start? Just a bit of an overview. I think a lot of people will know what you guys do.
Yep.
You're one of the biggest and the best in the game. We know that. But just for the people that might not.
Yeah. Absolutely. So yeah, Magnitude Finance, we're a finance broker, not a lender directly, but we've got access to a panel of probably 30 plus different lenders in the marketplace. And we're here to help people fund their cars, new cars, used cars, and hopefully to see them grow on the journey of the first car they get, and as then progress up to different models and how they go from there. So yeah, we fund cars really from £10,000 going up to multi-million pounds where we need to do. Magnitude's part of the DSG Finance Group that's been the oldest in the marketplace. They've been trading over 35 years now. And we write well over £600 million of finance a year as a group. So lots and lots of cars.
Crazy.
But with that, we do get the buying power with the rates to make things attractive at the same time as well. So we have to be competitive out there. And I guess our main route to market is to help, which is what we're doing today, guide customers. Exactly.
Yeah, I think that's for us is one of the main reasons that Gravity's partnered with Magnitude Finance is we want to see people be able to get into their dream cars.
Absolutely.
And guys at home, Tim is the man when it comes to getting you into your dream car. And like I say, educating people on the do's and don'ts, the bads, the goods, what's happening in the industry in finance. Like I say, we've all, as a team, been surrounded by cars for many a year. And sometimes we might think we know more than we actually know. But regarding finance, I think it's so important to have someone that actually knows the facts.
Every day's a learning day.
To start spitting out to the audience. Yeah. So, I mean, first of all, I'll hit off on a bit of a hot topic over the last year or so. But as a lot of you know, and I'm sure you're aware, there was a very famous, prestigious brand dealership, if you will, that had some trouble over the last year or so. It's been on social media. We won't name names, but they had clients, supposedly lose 350 grand. I want to twist that on its head and sort of ask, if that was me and I've just lost 350 grand because the said company's gone bust, How does that work with finance, especially if I've not got the car and the finance agreement's in place? Is that something that you would then, look to go to the Financial Conduct Authority or?
Yeah, I think the first things there is, as soon as this happened in the marketplace, everyone was quick to jump on it. And the sale or return is the technical term that people are putting cars in and saying, can you sell this for me? So a lot of trust, and there's no reason not to trust people. But the mechanics behind the scenes are, if your car is on finance, that car is actually owned by the finance company, not you. So if the car has gone missing, you can speak to the finance company and they can help you get that back. So you wouldn't technically be out of pocket directly yourselves there. However, what these people were doing were funding cars that were not on finance. So if they were receiving the money for the cars, there's no, when you take finance out, they put, I'm going to call it a flag, an indicator on the account, so they know it's on finance. So people can't just sell it on. Whereas these cars were being sold on, they were receiving the money, not paying the original owner, which is where the people have been left hundreds of £1,000s out of pocket.
Okay.
So the clear element there is, we call it title in the industry. We need to make sure that title passes from one owner to the next, or even the finance company. We have to clear the finance off before we can do a deal. So yeah, I did do a little video on SO as soon as it happened, because it's not a bad way of doing business. And lots of dealers, even main dealers, have cars that they're selling on behalf of customers. But it all comes down to the pedigree, and we find out what we're doing, mainly on the higher advanced cars, and we'll pay the end user directly if the dealership doesn't have the money to do it, and a lot don't. When we're talking £100,000 to £200,000 a time, it's a lot of money to actually pay out before you get it back from the finance company, even if it's for 24, 48 hours. So our key mechanism here is to make sure we've got the title to it.
Okay, perfect.
But massive red flag, and sadly, there's an even more recent one as well that's done exactly the same thing, and they won't be the last. Sadly, it'll happen again.
What's the sort of, you talk about red flags? I'm sure we'll go into it further into this video, but if I'm buying a car from a dealership, and look, we all get excited, right? I've gone into dealerships and put deposits down on a car that I really wanted to own. I pulled out some, I bought some, whether they're the right or wrong car, we'll forget that for another day. But, if I'm walking into a car and I'm going, look, it's a £100,000 car. What is like a red flag or something that you should really look out for? Is it like you say, your titles, where it's like, we are FCA regulated, we are, we've got skin in the game.
These two recent dealerships both were as well, sadly. So they are FCA regulated, because they have to be to do what they're doing. I think that the key thing comes down to it, that if you finance a car, you actually do have more protection, because it's the finance company that owns the car.
Yes.
So that's one remit. But if you are going in there and there's talks of invoicing and cash payments, and I need to sort this out, it'll probably just feel uneasy. Or if it sounds too good to be true, that is something else just to be aware of. But the sad thing is, this is a very, very minority in the sector. There's hundreds, thousands.
I guess it also
of dealerships out there.
It's a shame. And look, the point, of that question being that it almost does taint the industry, especially for dealers. I mean, which leads on to my next point after that. The whole, I guess, for the finance and funding side of the business rather than the dealership side, but everyone and their mum is jumping on the whole, commission, clawback, compensation, whatever you want to call it.
I'd love to say I've never heard of it. But every time you go to the service stations for the toilet break, there's something in front of you.
The reason I wanted to bring it up, and look, I know you have so much knowledge in the game and you know what's going on compared to us. I think for a lot of people at home, especially us as a team, we spoke about it, we don't know anything. I think we get fed a lot of information, as we do on social media with a lot of things, whether it's the news, whether it's this, that, whatever.
Yep.
No one actually knows what the current sort of affair or state is of it. And I think we've been pushed so hard into, you need to get compensation, use this, use that. And look, I'll let you expand on this, but I recently, as of yesterday, saw a post from the Financial Conduct Authority on their Instagram page saying, hey guys, think before you use some of these companies, they're taking 30% of what you're owed. we wouldn't do that.
No.
Come through direct. And I'm just like, that's not been pushed. I've not, and obviously because, these companies that are wanting to do that, yes, look, they're getting commission. It's a business for them. I completely get that. But for something like compensation, I think it's a real sour taste in my mouth of like how it's done.
It is. There's going to be, I think if we rewind about what's happened originally, it was to do with people charging higher APRs to try and get more commission out of deals.
Yeah.
Commission is not necessarily a dirty word. People have to earn a living.
Commission's business,
so
right?
It is, yeah. That's where we make our margin, and often it's smaller margins. But people were then taking higher margins out of deals, and there will be compensation for people.
Yeah.
The FCA are going to be launching their final redress hopefully in the next couple of months. So people will get compensation, and the finance companies will pay it back to customers directly. You don't need to get claims management companies involved that are going to take 30% of the fee. There's no way the commissions will have been 30% in the first place.
Yeah.
So why pay some of that away?
It's almost like they're doing it.
Yeah,
doing exactly what that finance
they're doing the industry dirty,
exactly.
because that's what they're
100%.
promoting it. So that's why the FCA are keen to do that. So the customers that are due compensation will get the full 100% back in their own pockets. Yes, that's the thing has changed a lot over the years with the FCA and the regulations and requirements, but it will be down to all the lenders to write out to customers directly and say whether they are due commission or they're not. And that's what the FCA are going to be putting the matrix about. My own thought processes with what we do, we've always been extremely competitive on rates.
Yeah.
The commissions have never been that high of what we actually take out of deals. Normally it's a percentage of the amount borrowed that you take. So I don't think there's going to be too many of our clients that will be due commission.
Yeah.
But the FCA have not finalised things yet.
Okay.
So we'll find out. And it is a competitive world out there. Yeah. Customers now, and we'll talk about this a bit later, need to be savvy and looking at other funding options rather than just the dealer. Because every 1-2% saving, that's a saving of pounds per month.
I think it's very different. And what I'm hoping we get out of this, like we said about educating, our followers and the wider mass audience of you're someone that ultimately has a business that offers this product. But you're out here telling the truth. When ultimately, as much as look, I appreciate it, and I think our customers will appreciate it. You don't have to.
Yeah, we don't have to, but it's part of the integrity. And there's the key word is consumer duty. We have a duty to our customers to make sure that the product's explained correctly to them, and that can come down to the fact: is it a guaranteed end value or isn't it? Because it has a difference. Yeah. The cheapest payment is not always the cheapest deal. Yeah. So we give the customers the option.
I wish I knew that.
Yeah, we give the customers the option as well, and we try and look at, do you want to pay a little bit more per month, but the overall interest will be lower? Yeah. And this is what we try and talk to customers about. There are examples where a customer will say, I've had this quote from the dealership, Tim, and I'll go with it. Yeah. It's a really good offer. Yeah. And they go, really? I'm like, yeah, because that is the best thing for you. And if we can't compete and we're not more competitive, rarely happens, but it does happen at times. We'll just be honest, because that customer would rather get the best deal they can, because you know what? Next time they're going to come back to me and go, can you do this? And even if we say yes again, eventually there'll be a time when we'll go, well, do you know what? Yeah, we are cheaper, and hopefully building that integrity and that loyalty with the customer
100%.
base.
I think as with it being a time filled with so much uncertainty, like I say, especially with the social media push of the compensation companies, and how no one really knows what's going on, you and your team sort of coming out and speaking about it in the way that you do, like he says, builds confidence, especially for people like me that do have a car on finance or are looking to get a car on finance. When you don't have to, you could be like some people that are sort of sitting back and hoping that it kind of
goes away
when ultimately it's not going to.
Well, commission we talk about again. We have to disclose our commission to customers now. Yeah. So whenever you do a deal with us, we will tell you exactly how much we earn as a percentage and actually the amount. But the flip side of that is if we've got the lowest APR, the commission is built in. We can't change that anyway. So that is the deal. So it's best for the customer, and we earn what we earn out of it. We don't always keep it all, because if they settle early or something goes wrong in the future, we might get some of it clawed back. But that's where our business profit margin comes into play, how we pay the overheads.
Yeah.
So it is important, but it shouldn't have a massive impact on the customer because they should be getting the best product for them at the best rate as well.
Perfect. Okay. In regards to and on the topic of the customer, me being one, when someone goes to finance a car, especially something like I don't know, if I was to go finance a G80 M3, and I mean, look, the car's behind us. We all know us here, especially at Gravity, cannot keep a car stock to help ourselves. So if I was to go and buy an M3 and I go and whack, I've used Magnitude Finance and I've been funded by you guys and your lenders. I then go and slap a big single turbo on it. I wide body it. Where do you stand? Because I think this is a real important question that a lot of people at home, whether you like it or not, they need to know.
Yep.
Because I think there's a line of people getting away with stuff, and the finance company are not going. But am I right in saying that? I mean, I've heard stories of people looking on social media.
The finance companies don't particularly like modifications. There's standard modifications, a lot of the 4x4s that will enhance the cars.
Yeah.
There's some finance companies that actually will do. We've been looking at some recently, and they understand it. Actually, it's added value to it, and some conversions do add value to it. But it comes back down to the type of product that you're on, and that's the understanding. We're very transparent with the lenders, so we'll say to them, "This car has a modification on it. Can you fund it?"
Yeah.
And they'll just say yes or no. If they say no, we can't do the deal with them. A lot of the PCP providers, so PCP, personal contract purchase, is where you can hand the car back at the end of the term.
Yep.
Can you imagine you spending all this money on the car and then handing it back to the lender at the end of the term? And the lender that comes to collect that car is going to be scratching their head going, is this the car that we've really funded?
Yeah.
So they're not going to be happy about that. You'd have to put it back to the normal car if you were to hand it back. But let's be honest, a lot of people that are doing this, you're not going to invest thousands of pounds in a car and then just hand it back and walk away from it. So that's where it comes into it. So the different types of modifications, if you're not doing anything to the engine, it's less of an issue for the lenders, because if the manufacturer's warranty is still there, you've still got that safety net. As soon as you start doing things with the engine, the exhaust, the manufacturer then walks away from it. So it's an added risk to you as well. So we always say it's going in your eyes wide open. So do lenders like it? Not particularly. Will they fund it? Yes, some will still fund these kind of cars. We fund modified cars.
I guess it's how far people want to go, right? Like I say, it's a real important subject that I want people at home to know, in the sense of, like you say, manufacturer warranty. A lot of people go into some of these cars and go, "I finance my dream car, perfect, but I want to." And look, we've all done it. I've done it. I want to modify it because I can't keep it stock. Yeah, that's just not what
everyone wants to be different. Everyone wants to be unique.
Exactly. Yeah. And they go, "Oh, do you know what? The manufacturer won't void the warranty, so they won't know." And the finance company, they won't know until, and again, I've been in that situation. Car's been written off. It all comes crashing down.
Well, you've not mentioned insurance there either.
Yeah.
So the insurance is the other aspect. Are you insured for modifications? Yeah. That is probably more of a key thing than the other two. Because if you do write it off and you're not insured, you've got an even worse problem. But I'm looking, I don't know if we can see it behind us, but the Saxos, the hot topic at the moment. Yes. That's the kind of thing that if someone came to us and was looking to fund, we'd have to go to one of our specialist lenders for that. And they'd have to, the strength of the customer would probably what we're looking at more than the actual asset itself, because it is so unique. But we can still fund it. So
100%. Okay, awesome. The do's and don'ts. I think we've briefly just gone over some of the things that make you really good at what you do, and some things that aren't great at what customers do, and how people can end up in a sticky situation. But ultimately, I'd just like to know a few do's and don'ts. And like I say, we'll go into more, I guess, how we can structure certain deals or how to make them better for the customer later down the road. But as a brief overview of do's and don'ts, when you're taking out finance with Magnitude Finance or whoever, you've gone into a dealer and you're dealing with their finance company, what are things, like I say?
I think my first thing is always get a quote. I'm plugging obviously ourselves there, but always get a second quote just to make sure that the deal is good that you're getting. And if it's not, you've got a comparison. So that'd be
and it's easy, right?
It is dead easy. But it takes seconds to get a quote.
I think George was in London the other day. Just a quick topic before we get into that. Of I think going around having a look at some of the cars, and George being George, itchy feet. Oh yeah, I wonder what that is. I wonder how much that would be. And it honestly took Brandon behind the camera will be able to confirm, but it literally took all of I think like 7 seconds.
Not long
to put in, and it comes spit it out. All of a sudden, that's doable. Well, that's not. But it's crazy how quick you can.
It's they're generic. The system's set up to do that, and online, dead easy. If it's more specialist, you've been WhatsApping me on some stuff. Really, WhatsApp is the preferred communication for most people these days. All our customers on WhatsApp, and we send a quote back via WhatsApp as well. And we can do that off a system. We can generate it. Using our experience, we tend to know where the future values are going to be on a lot of these things if it's not a PCP, and structure it like that. So dead easy, and we can do that via the system or personally.
I think that's one of the real big tick boxes for me personally, and I'm sure a lot of customers at home. You know, if I have a car that I can't just generically go and type into your calculator and get a quote, or WhatsApping you or one of your team members, whoever that may be, speaking to an actual person, and just, you guys are super knowledgeable, your whole team are, we know that, and just making it work. Whether it's the answer that you want, I think that's a main thing to point out. I've been in the past told answers that maybe I shouldn't have been told, but they wanted to get the deal done. Like you say, some people are a bit pushy, especially when the commission wasn't sort of regulated or whatever. And I was forced into maybe deals that, okay, if I would have spoke to you, 5 years, 10 years later, you probably would have gone, Dom, have a double think.
I think a lot of people think our WhatsApp's a live chat with a robot behind the scenes. It's not. They're human people that are replying. So you do get that quick response on that side. But as I said, it comes back down to making sure people have options. So when we're getting a quote, it's options. We'll give options as well as what they're looking at. But I guess that's probably the biggest do and on day one. The other thing that you have to think about is its affordability is a really, really key word in the industry now. Can you afford that car? If you think you're pushing yourself to afford that car, I always say to customers, if you were lending that money to someone else, would you lend them that money? And it's a great way to look at it.
Yeah, it is actually.
Would I lend my money to you buying that car? And you look at it and you go, okay, what would I need to do that? And that's a great starting point. And we'll talk about deposits a bit later, but someone putting no deposit in, they wanted to stretch with a big balloon after 5 years.
It sounds like the conversation I have with my parents when I was financing my first
sorry, mate, you're making me sound old now. But that's the kind of thing you're thinking, well, this guy's really, really struggling to get into the terms. Whereas you've got someone that's putting 40% deposit down, only wants it over 2 years straight repayment. You go, actually, it sounds like he can afford it. So it's I call it profile building internally with the team, but looking at that customer, can he afford it? And that's the. I know there's aspirational things, but you've got to start somewhere.
It's being honest with yourself.
It is, Right? So deposit. People go, I don't want to pay a deposit. Why? Deposit's going to bring your payments down, and that's a good faith towards the lender that you're putting money into your commitment. It's unlikely you can buy a house these days with no deposit.
I was about to say, regarding mortgages, even rent and stuff like that. It's
and a lot of our customers buy the cars before they buy the house. So that's another thing, that if you're a homeowner, it does make it easier because you've got a trace, a footprint. Try and make sure your credit's up to date. Everyone has Experian, Equifax, ClearScore, whatever it is these days, often on the phone as apps. Look at your credit rating, because that will try and guide you to where you're going to be. But we want to see that you can afford it, you can repay it. If you've got no credit at all, why should someone take a risk on you? Even having, my kids are both still relatively young, tell them, get a credit card day one.
It's a good point. I mean, like I say, when I was younger, I was very much, and I'll speak, probably for some of the people at home in the sense of, I'll be totally honest. When I was younger, it was a case of I wasn't honest about what I could afford. I would try and stretch myself because I wanted to feel, for especially for car people, not so much the normal person. Yes, there's still that element of, ambition. But for certainly a car enthusiast, especially the people at home, it's more than that. And I feel like I certainly have stretched myself way too much. And you just can't be honest with yourself because you can see it there. and all that's in between you and that is ringing up to him
it is.
and getting that.
Yeah.
It's hard.
Yeah.
So I do think on that point of being honest with yourselves, so important. So important, especially in a climate where I feel like a lot of people, and you've probably seen it, everyone's very, competitive these days.
Social media's not always real, is it? But it does attract people.
It's competitive, and some people are pushed into decisions that maybe they shouldn't make. But having someone like Tim, I guess deal with it. You being honest is helping me go. Well, maybe I shouldn't.
On the back of that, when we do a deal, we get a proposal information sent through to us without going into too much technical stuff. We do a soft search on customers, so we can see the credit score. So if you're unsure, we can run through that with you, and we can go, actually, do you know what? There's a few things on here that you need to get onto your search and have a look at. But we might go, do you know what? You're an A-rated customer. There's a good chance you're going to get finance. But at this level, not this level. And we try and guide people to that way as well, because everyone wants to push themselves. But at the same time, you've got to try and be sensible. I know it's really, really hard at times.
Really hard when you've got the...
Well, it's emotive,
your
isn't
dream.
it? A car is emotive, more emotive than a house or anything else. And it's probably the second biggest purchase most people will make in their lives after the property. But also, you want something that you can enjoy as well.
Yeah. It's crazy how, I guess, readily available finance is now. And that's because the industry's gotten bigger, stuff like that. But on that point of people being honest and potentially stretching themselves, how crazy that, how big the market is now in general. When I was at school, I remember the first couple of people that really started to get when we left school and in sixth form and college, they got their car on finance. I paid 1,500 quid for my first car, and it was the absolute bomb. A couple of my friends paying a couple of £100 a month or £150 a month at that age, and it was like, I remember it was like,
everyone remembers the first car.
You're in trouble. You're in trouble.
Yeah.
And now, I could probably tell you off my hands. I know, anywhere between 5 and 10 people that don't actually have finance cars. The rest, not that it's a bad thing. Like I say, it's readily available, and I think it's really affordable for what you can get in now. And I think that's the
cheapest way to buy a car is to pay outright for it,
because
you're not paying interest. Not many people can afford to do that at the levels they want to push towards. So then it's looking finance as the option there. But we've got some customers that the finance is just finance after finance to finance, and we often see bank statements, which is probably something else. Don't be scared. Should we use open banking now with technology? Don't be scared to show your bank statements. But also, if you are going to do that, just think about making sure that they're right. And again, as part of what we see when we're looking at bank statements, and you put your funny reference when you're sending money to a friend, we're laughing. We've all done it.
Random on the camera.
Remember, an underwriter might see that at some stage.
I think I remember that when I got my first house, and then they were like, so don't be sending that as a reference.
And also the kind of things that you're maybe subscribing to without going into too much detail. But when the lender's looking at that, they often have a summary behind the scenes, and it will say gambling debts as well. So believe it or not, whilst the National Lottery buying your lottery tickets at 10 quid a month, that actually is classed as gambling. So they do look past that. But if you've got lots going out to other gambling firms, it doesn't. Your bank statements might look fine, but they're thinking this guy's into a bit of gambling. Is it an added risk? So this is all about the control of presenting things correctly to the lenders.
I guess for you guys specifically, and everyone in the funded and finance industry, lender or broker, you don't know these people. I know you've got clients. You've got people like myself that you know very well, but you also are dealing with people that you don't know.
Correct.
So how do you measure risk? How do you, and like you say, looking for their bank statements and going, God, I spent like £1,000 on gambling this month. Probably a little bit of a risk, and you can't argue with that, right?
No, it's added, and it's. I treat everything as a common sense approach. Because that's the best way to look at it. And again, the regular income streams coming in. We have a lot of customers that say, "Oh well, I'm earning this, but I've got all this extra cash. I can't do anything with that. If you can't prove that to me, I can't include that in the proposal." So either getting your bank statements. People don't like paying tax. We all understand that. But at the same time, you've got to make sure that you can service and afford it and demonstrate it. So we'll say to people, what's your income? And they'll say £100,000. Can you evidence it? No, only 50.
Only
right,
10.
okay. So that's the other thing.
Yeah.
And again, when we're talking about the higher value cars, the directors, what's your income? £12,500, because that's the tax-free limit. So we then have to get extra questions with them, and we know what we need. But they're sort of like the more complex ones.
Yeah.
Your standard cars, it's like, okay, just again a common sense thing. When a lender's looking at things, demonstrate to them that you have got this income coming in. It's stable. You've been in your job a while. You're self-employed. Make sure you've got your accounts up to date. Because these are all things that the lenders will need.
It's very easy, and like I say, again, I use myself as an example because I'm the guinea pig here. But I've sat behind the screen or on the phone to a company trying to get finance or trying to get a car, and they're going, "Oh, but you didn't tell us about this or that," and I'm sitting there going, "Just give me the money.
Yeah,
like I can afford the monthlies, so why are you not giving me the money?" And you don't think at the time, and I'm a little bit older, and you know, we know people like yourselves where we know a lot more now.
Yeah.
That we actually look at it and go, okay, they're looking at it from a risk factor.
Yeah.
You know, it's but you don't do it at the time.
I think the other thing, you can be naive when you're a bit younger as well.
Yeah.
Because you're naive, if you pick up a late payment, a default, or worst case, a CCJ, county court judgment, that can stay on your file for 7 years. So if you have a little bit of an outburst when you're 2021 or whatever it is, and you miss a few things and thinking, do you know what, I'm not bothered, it doesn't affect me now. But then in 5 years' time, you want to get a car, you want to get into the property ladder, that's still going to show.
Yeah, it's definitely something to note. I guess it's a serious thing.
It is,
Finance is...
It's a bit dull, it's a bit boring, but at the end of the day, we all need it at some stage in life.
Yeah, 100%. And I think we talk about how easy it is to get. And a point to note is, it is serious. It's not like you say, if you miss payments or get CCJ, you're affecting potentially you getting a house in the future or getting finance from somewhere else or another car. So it's something for people, I think, like I say, because it's so accessible, people just don't think about it now.
No.
Oh, I'll finance that. Okay, great. But
the thing is, you go onto any store now online and you've got Klarna and paying 3 payments and installments, and that actually helps your credit file because it will show on your file, but make sure you do pay it.
Yeah.
Don't forget about it.
Make sure you pay it. Regarding sort of, I guess, the industry and how expensive or cheap things are, right, that we were just speaking about. The current state of the UK economy. I know it's not a really exciting topic for a lot of people at home. Some people probably are really into it. But just in terms of your industry, have you found it, say, worrying? Has there been massive amounts of change, especially like the car market? You know, people say that the used car market's crashing. Is it? I don't know. I mean, I'm constantly on Auto Trader looking at cars I can't afford, granted, but I don't really, you know.
They're not getting much cheaper on Auto Trader, are they? They're still selling them. I think that the big thing is the influx of electric cars that are coming into the marketplace that are getting better. They seem to be really, really cheap. So that does impact at one stage. But then the average price of a normal car now, £30,000-40,000. So that is getting more expensive. But the market, the top end market, I think that's, well, there was a recent auction a couple of weeks ago, and Ferraris, wow, some of those values that went through. Did you see that? Yeah,
crazy.
Oh, crazy money. But so that has gone the other way, because people now are trying to buy those Ferraris because they're thinking in a few years' time they're going to just keep up going up in value.
If they've done anything what some of the others have done.
Yeah. So there's so much opportunity out there.
Yeah.
I think over the last year, 24 months, obviously with rates being where they are, everyone's had the mortgage payments have gone up. People have been a little bit more conservative, but there's still been plenty of opportunity to go out there and buy cars. The COVID bubble, I think, has definitely burst, but that was a little bit unreal because prices went ridiculously high then with the lack of supply that was coming through. So there's still plenty of cars out there.
You say rates there, like, I mean, I know what they are.
Yeah.
How do they work? Who decides what they are? And I guess currently, I mean, just off the top of my head, when I was going to get a car probably a year ago, maybe a little bit after a year, the rates were quite high. I only say that because I had a car probably 5 years ago that was like extremely low. And I was like, this is unbelievable.
Yep.
And then it was like 12, 13%. I've got friends now that are paying 13% on cars. How does it change?
So I think the key thing there is, and again, we link it back to ultimately, it's all affected by the banks.
Okay.
So the bank base rate was very, very low, and then it went really high, 21, 22. And we're now, it's at 3.75, so it has come down a little bit as of yesterday, stayed stable. But that means that the banks are having to lend money at a higher rate because they're taking deposits in. Ultimately, they lend the deposits that they take in and they need to make a margin on it. So when it was down at 0.5-ish, again, there were savings rates were really, really low. So they could lend really, really low. Now it's at 3.75, 4%. They're having to pay more money on savings, which means they have to lend more money. Does that make sense? That's the balance in the marketplace. But then also there's a lot of the banks, the institutions all need to make a margin on that money. So they've got to make sure they lend it out at a higher margin. We then want to take our margin, our commission out of that. The dealers want commission as well. So it does actually scale up. So rates have come down recently in the last couple of months. We haven't seen a massive change in the rate out there in the market because what the banks will tell you is they've already factored that into they call it cost of funds, into their future ongoing. If rates keep coming down, eventually we'll gradually start to see some reductions.
Do you see, I know it's very hard, and look, this is in no way advice on this is what's happening in the next 12 months. So don't go and buy out
I've not got that crystal ball.
Huge investment car based on the fact that Tim said the interest rate is going to drop. How do you see it from someone that's been in the industry, for a long time? You've smashed everything you've done. Going forward, next 12 months, 24 months.
Yep.
Do you see it potentially increasing, staying the same, decreasing?
I think it will come down a little bit, but not a lot. So there'll be a small change in the rates, and we've seen that with some of, again, I'm going to say our sophisticated investors that are involved in the city in trading. Yeah. They're looking at this. This is their job on a day-to-day basis with large hedge funds and money that they manage. They're now starting to express an interest in a variable rate deal because no one has wanted that before for the last 5-6 years, and that's because they know if they go into that now, when rates do start to come down, they'll benefit from it rather than fixing in. A lot of customers are more conservative these days, and my advice would always be at the moment, fix into where you are on a regulated deal because you know what your outgoings are going to be. Just in case we've got a lot.
I guess it can change quickly, right? And I think it's the main point. And I won't go into too much detail, but I remember when I first bought my house, I got a fixed variable rate on my mortgage, and that was when they were like
really, really cheap,
1-2%, and I was like, quids in. And it just felt like overnight. Obviously, it wasn't overnight, but
it did jump up really quickly.
Yeah, what it felt like, I've got all of a sudden I was at 4 or 5%, and my repayments almost were like nearly double,
triple. Yeah, well,
and it was like, wow. And like that, I guess the same can happen with car finance, right?
It happened with car finance, and it was almost like a double whammy because people were having to pay more for their mortgages. They weren't getting paid double the amount of money.
Yeah.
So their affordability was stretched with the mortgages. They then realised they had to pay more for car finance, and it was a headache for a lot of people. So some people just didn't want to change their cars as often as they would do because it was going to cost them more for that car. If you then factor in the balloon values, the end values at the end, they were coming down, which pushes your payments up because unnervousness in the marketplace. It was all everything thrown to customers at once, and everything seemed to cost more money. But that was the economy that I think we're still in to a degree. Yeah. And it will come down. But people now, we were in a bit of a false economy before. It was too cheap with the rates that we were at, and people were buying supercars. It was great at the time. Yeah. They couldn't really afford now. Whereas at the time they made them affordable. Yeah. So we had lots of volume going through, but that also then had the impact on the oversupply of cars as well. But everything's balanced in the marketplace. You pull one lever, it affects the other.
Moral of the story is, hopefully they will drop overnight.
From my point of view, if I'm guiding someone, Fixed rate, regulated deal. You know what it's going to be. It's fixed for the term.
Yeah.
And if you've got a guaranteed value, you can get out of it.
Yeah.
I've got a deal that actually I didn't finance myself, believe it or not. Did it with Land Rover Finance, because I wanted the guaranteed value at the end. Because no one knows where those cars are going to be. And if it's worth more, I can benefit from that. If it's worth less, I can hand the keys back and walk away from it. And that gives me peace of mind. And also their rate was a subsidised rate, so it was a bit cheaper than what I could offer at the time.
I'm just trying to think of how many, finance company owners would admit that you've gone and got finance somewhere else, for whatever reason, but can sit there and go, yeah, I did, and not gone, no, I used Magnitude because it was the absolute best rate that I could ever get and save loads of money.
Is that transparency?
Yeah, I think that is, honestly, for everyone at home.
Like that wasn't a list in the questions either.
I know.
That was natural.
Off the cuff. But for people at home, I can't stress enough. Like I say, with a time of so much uncertainty and really no one knows what people are doing, or the whole, Compensation Act and stuff. It's all up in the air.
Yeah.
No one really knows. We're all being fed a lot of stuff and just sort of hoping this, that, and whatever. Being transparent, like yourself, just puts out so much confidence. And look, at the end of the day, you being transparent, you have nothing to hide.
Yeah, I'd just say we're not here for one hit wonder.
Quiet, I'd be a bit like, this guy is taking money.
It's a relationship industry. Yeah. And we're not here to maximise the commission on one car and then not be here the next day. We want to just keep building.
It's longevity, right?
It's absolutely, 100%.
And I guess you want Magnitude to be here in hundreds of years and generations down, rather than it sort of being a good year and then we'll call it quits.
Yeah, absolutely.
But yeah, it's very interesting. On a complete different note, a lighter note, because I feel like we've hedged a lot of negative stuff in the industry. But like I said, it's so good to get clarity on a lot of that, especially for someone like me that all I just see is it all on social media, and I get a bit confused about what actually is the right and wrong thing to do here. Who's right and who's lying to me?
Yep.
So it's really nice to hit them topics off. Good. But like I say, on a lighter note, you've been in the industry for a long time, like you say. I want to know some cool and fun stuff. Like, yes, you fund your normal cars. Your Golf Rs, for example.
What's normal these days?
Well, I know, but for me, I would class, I guess, a Golf of whatever, or a GTI or a Golf, whatever. Something of that value as a normal entry-level car for a lot of people now. You obviously do really high-end stuff.
Yes.
What is the most, extravagant, crazy, I say most expensive, but what does that deal look like? What has it looked like for you?
Okay. The memorable one, and we don't do lots of £1 million cars because there's not lots of them in the marketplace. But we did fund a Pagani wire for a client, and it was brand new out of Pagani UK, who we had a relationship with, and 2.75 million. So big.
I will put it out there.
Oh.
I'm not at a level yet where I will be ringing you up for finance on a 2.7 million.
I've brought the finance documents with me. Are we not signing?
If we can do an absolute minimal deposit and monthlies be under 300 a month, I'm there. Absolutely there. But yeah, crazy. What is the, like you say, monthlies on something like that? I mean, obviously it completely depends on, I guess,
the structure you put down, and again, looking at that one, is £500,000 deposit, which is sensible. It's still under 20%, which we normally expect, but that was okay. And we did I think at the time, a sensible final value, balloon payment, nothing guaranteed on this, of £1.5 million. And payments just under £28,000 a month. Wow. You think about the kind of customer buying that, though.
Look, I can't sit here and go, that's absolutely crazy. Ultimately, if you're buying a Pagani, you bred it up.
And this,
but I guess when you give, and this just goes on to one of my other questions that I had, because I don't really know how they come about. Residuals, right? You sit there and say, after your term, that Pagani's worth £1.5 million quid. Ultimately, I guess Pagani is a bit of a bad example for me to ask about because
it's always going to be a lot more than that.
Chances are that it'll be worth 5
Yeah.
million, like Conan's eggs or Bugatti's, whatever that may be.
Yeah.
Who comes up with the residuals?
Okay.
Where does it come from?
Yeah, good question, because it's guaranteed on a PCP, so the finance company have to be comfortable with it. So they actually use various bits of software and tools. So a lot of people have heard of CAP. There's a new industry sector now called Brago that we're using, which literally scours the internet, the websites, and it sees what the values of cars are and predicts the future of them against what the previous cars are 4 years older, and it kicks out a value. So the values it kicks out of, you get like a retail value and a trade value. So a lot of the lenders are happy to work on trade, because the idea is it gives them a little bit of leeway if they need to do.
Yeah.
And this is often a customer balloon, so it's the customer's own risk, but we've got to treat customers fairly. On the PCP deals, which again, the guaranteed ones, sorry for the jargon, but those ones, they're going to be probably a little bit lower because the lenders don't want to come unstuck with them. However, saying that, we've got some lenders that have a lot of exposure with certain brands. I think Tesla's a key one, really. They were putting some strong residuals on Teslas on PCP products. And then overnight, overnight, Elon turns around and says, I'm going to discount this price.
It's not
and then 2 weeks later, he does it again. So they're scratching their head thinking, we've got all this exposure and these values that we've guaranteed. I'm sure they've probably got a Tesla.
They offered 0% finance.
They offered 0% funding as well. Yeah, there was loads of deals in the early days. And obviously they were the first adopter in the marketplace. And those are washing through now. And I'm sure Tesla probably supported the residuals at the back end as well. But yeah, it's just looking at where values are in the sector. And the great way that I tend to do it is if I'm unsure, I go onto Auto Trader and I go, do you know what? I'm buying this car now, which is a 2025. Let's just see where a 2021 is.
So actually, do you know what?
Gives you an indication.
That's so simple, and I didn't think about it.
Models change and variants, and you look at the mileage.
Within tolerance, but I guess
I use that common sense approach again. Because if we can justify that's where it is, the chances are the 2025 is going to be a better variant now.
I've had no common sense over the last. That's a really
easy tool. And it gives you an indication of where you're going to be. But also, what we have tools within what we do is we can say to you, your finance in 24 months' time, if you've got like a 4-year deal, the settlement's going to be this, and you can then go, do you know what? In 2 years' time, I'm looking at coming out of it. Probably it's all unknown. You don't have to do, but flexibility's there. Well, if that's the settlement, I know the car's going to be worth roughly that. I should be able to go again.
Can you query the if you come to me, right, and you say, Dom, this Saxo that you've got, our residual in 5 years, whatever, is $5,000, and I go, no, it's 10 grand because I've got this, that, whatever. I've seen the market, blah blah blah.
We would do that in terms of as a broker, not with PCP because it's a guaranteed value, it's the lender's risk. But we'd put that across to when we call it manual underwrites. Okay. So with some of the lenders, we can talk to them and go, do you know what? I think this needs to be at that. The chances are they're going to go, don't agree with you. We'd rather stick to where we are. But another example, if we talk about Porsches, so GT3 RSs, you're buying them at 250.
Great car.
Yeah, brilliant. Buying them at 250. Yeah, week down the line, they're worth 300. Okay, so where's the value? Because Porsche won't value it more than the 250, whereas we'll go, it's an appreciating asset. Again, let's not get too much of those because there's not loads of those out there.
Everyone buy 3 RSs.
Don't go into buying a car thinking you can make money on it.
But for the first time, say ever, but the 992 3RS that come out, absolutely gorgeous car, amazing in every single way. They were selling at the start. I mean, I know there's a bit like BMW, right? When the M5s come out and all the M3 Tourings come out, just punch, all of a sudden, come down. Them 3RSs were selling for crazy money. And now, I look on the market because I do every day. Not that it's going to happen anytime soon, but there you go. Drop so much. Yeah. So do you...
Well, I think when you say drop so much, have they dropped from the madness of where they were pitched?
Yes.
Or have they dropped back down to where the retail levels are?
Great point.
And I think that's what you got to sometimes look at.
But so you will take that into account,
yeah, we'll look at that as well. But then you get to that stage where, yes, it's dropped, but the chances are now it's probably stable. So is it going to drop much more?
Yeah, I guess because if it's done its mad push, and it's dropped back from
I feel
£500,000.
Feel sorry for the people that bought them up there, but those people were desperate to get those cars and happy to pay that premium.
They still do have a 3RS though, so ultimately, you win some, you lose some, right?
Absolutely.
But yeah, really interesting.
And also think about the mileage. Are you buying it as an investment car and doing no mileage? Or are you actually want to drive it and enjoy it? And if you're going to do 10,000 miles a year in that car, it's gonna drop in value.
Yeah, I think unless you're buying some crazy investment car, and you've probably seen numerous over the years. You know, the old school Ferraris, the old Aston Martin, stuff like that. Like we were talking outside. It's just, you're never going to guess on what the next best investment car is. I have so many people always, these are going up. These are going up. They probably will.
Yeah. How long do you want to keep them to go up?
It's like, come on. It's between friends. So it is what it is. But I think one of the main things that I really wanted people to get out of this is, what are the main mistakes that you see from people, i.e. my age, or your, I guess I say your entry level finance, and I don't mean that with any disrespect. More
it can be anything.
More so, when I was younger, it was I really want a Golf R. I would love a Mark 7 Golf R. And finance was there, and it made it accessible, and it was great. But from that point, I guess, from that value up to, I don't know, your G80s, I guess, your M3s, your M4s. What are common mistakes that people make?
The key thing people do is they look at the monthly payment and they go, 6,000 miles a year is going to be the cheapest I can get it over. Okay. Yeah, there you go. And this is just
basically Tim sitting here going, Dom,
slating Dom,
absolute idiot, because I've done everything that you've said not to do.
I was speaking to your parents before I came in today.
Yeah, great.
They gave me the full backstory. But because if you're doing that, your car's not going to be worth as much when you want to come out of it. And if you go to hand it back at the end of the 3 or 4 years, if it's on the PCP, they're then going to sting you for excess mileage charges because you've actually done 20,000 miles a year. So you've then got to put money into it to come out of it. So it's that, again, a common sense approach. I hate to say common sense, Dom.
The thing is, you say common sense, but I always feel like I'm that little bit of winning. Do you know what I mean? Well, I'm on the website, or on your calculator, or I'm on Auto Trader. I'm like, it's 450 quid a month. I'd really want that to be at 400.
Yeah.
What can I do to get that down?
You can make it happen.
No mileage, blah, blah, blah. And then, like you say, and later down the line.
And the thing there is that £50 a month might seem a lot of money there and then.
But in the grand scheme of things.
But pay it, stretch to pay it if you need to do, because it will help you down the line with your equity, with the mileage and what the car's valued at. So you can come out of cars at 2 years, but then you're probably going to be, I use the term, buried in it. Because you're not going to be able to get out of it when you want to do, because the negative equity. People don't want to put money into a car when they're exiting it, when they're selling it. Put it in up front.
Done it once, being involved in negative equity, and look,
it's no fun, is it?
I couldn't even tell you what the definition of it means. I know I was in it, and I was selling it, and I was down bad. And it was a case of, I done exactly what you just said of like, look, I could afford the monthlies, but it was like, nah, I'll get that down. And I felt like I was almost, I'll take that from the finance company. I'll take that from the dealer. I'll get a little win along the way. And in actual fact, I lost quite big.
This is a financial contract. It's a legal document. You can't just turn around and go, do you know what, sod it, I'm not bothered. You've got to go into it. It's a contractual agreement. So
would you say, on the note of people, or the most common mistakes, or say mistakes, but things that, and I know, look, when people are getting finance agreements through you are very good at giving advice. Like you say, you're very transparent. So are your team, in the sense of, this is a good deal, take it or don't take it. Deposits, stuff like that. Obviously, I completely understand that it differs on the value of the car, the year, the time, the economy. Like, there's so many different variables that I think a lot of people look past. They just see the car online, as I have done, admittedly,
Yeah.
and just go bang, 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 great. Deposits, are they needed? As in, would you sit here and say, look,
we will do a nil deposit deal. I don't do many because it comes to the fact that you're putting a deposit into a deal. We mentioned it earlier. You can't buy a house without a deposit. Put a deposit in. It'll help bring your payments down. It shows your commitment to the finance company that you're putting money into it. And you have to pay that value of that car and the finance at some stage. That I would much rather put a deposit into it going into it than being in the DOM situation of paying when you come out of it. Paying to come out of a car finance agreement is just not, it's just nasty. It's not right.
It does feel horrendous. I will put my hands up. It's not, when you pay for something that is, especially as a car enthusiast, right?
Yeah.
Your beloved thing, like we spoke about, for a normal person, just financing a car, okay, look, it's a car, gets me to A to B. For a car enthusiast, it's buying, I don't know, an F80 M3, like we said, or G80 M3. That's their life. Like, it's such a big part. And like we say, people overstretch themselves. They go and get another job. They just graft even more just to be able to afford that dream.
Yeah.
And then when you come out of it on the bad, it almost does dampen your future, I guess.
It is, because it's a knock-on effect, because you've then got to use the money that you've saved or you've got spare to come out of that. So you then go into the next car and you've not got a deposit go down to that.
I guess that was my main problem.
It's a roll and effect.
I put on a good deposit.
I'd rather someone say, I'm going to delay buying this car. I know it never ever happened, but I'm going to just save up an extra 3 months of payments to let me put £1,000 deposit down on a £30,000 car. It just all helps. And the underwriter goes, actually, there's something going into it.
Yeah. I think, like I say, with my experiences, I put, 10 grand down on a car, for example. And if I got really badly stung in the sense of I bought the wrong car, granted, like you say, it's I get out of that car and finally I go, oh, thank God that's done. I've just, had my pants pulled down kind of thing. And I've now only got 4 grand out of that deal. But I see that car. I want that car now.
Yeah.
Oh, hang on. I need to put another 10 grand down. All of a sudden, every 2 years or every year that I swapped a car, notoriously for me personally, I don't know about others at home or yourself, but every year, maybe a little bit more, year and a half, I would look to go,
what's next?
Yeah, get out. Low risk, get me out. And that's what I do now, just to keep things stable for myself. But you'd end up in a spiral, like you say, of another 4 grand to add up from the deposit I've just lost. And then 3 or 4 cars down the line, I mean, you've basically bought a house. It's
I think
scary.
There's different structures, and with more of the higher value cars, we have some customers that are cash rich, and they say, I want to put a big deposit down.
Yeah.
And we call it interest only. Let's just say someone's borrowing a £200,000 car. They put £50,000 down, and they're borrowing 150. We put the balloon at 150.
Yeah.
Normally over a 2-year deal, and they just pay the interest. So in their mind, they know that they're using their deposit to keep their payments low. And they're doing it as a one-off hit up front. Okay? And they know when they come out of that, chances are they're going to have to do it again for the next car, but it keeps the monthly outgoings low.
Yeah.
What we're talking about on more of the generic cars is that actually you're putting a deposit down, you are going to help you with payments on that. Yeah. And it's about balance.
Is there a rough generic...
10% is typically a great level of deposit to put into most cars.
Okay.
And that should also help you with the depreciation on day one. Okay. So when you drive it away, the nice thing there is if you're putting 10 grand into a car and it's a £40,000 car, for me, that's peace of mind. I know if I need to bail out of that car for whatever reason, I've got probably a little bit of equity and I can get out of it without any worries.
Yeah. It's
like everyone knows with the house. Worst case scenario, you need to sell your house.
Yeah.
If you know it's valued at a lot more than the mortgage outstanding, that's straightforward. Yeah.
Is there a point of, I said generic number, I know it's very, I guess, based on individual cases, and you probably get so many questions that you're probably sick of hearing, and probably, I guess, customers that you've had ring up, your team members in the office and be like, oh, how can I do that, blah, blah, blah. If I've got a 10 grand deposit, is there like a number that where every £1,000, and my monthlies are £500 and I've put 10 grand down?
Yep.
Is it like every £1,000 or every £500 that I would get like 50 quid off? Maybe
Roughly, I work that. typical 4-year deal with a balloon. Each way, every £1,000 extra is £20. Every £1,000 less is £20. Just working it out roughly on your monthly payments.
Okay.
But again, it does depend on the overall deal.
Handful of questions remaining that I would love to go over. I think would be super beneficial for the audience at home. One quite funny one that come in yesterday is being, if you had to, and it has to be financed, can't be buying them outright. Your 2-car, your dream 2-car garage has to be financed, funded, whatever.
Okay.
That doesn't really make a difference because you can pretty much fund everything.
But I think that makes it quite easy because I'd go for the most expensive car on the planet because I get loads of commission out of it then.
There you
That's
go.
thinking, eh? Entrepreneurial. Oh, what would I have? I'm.
Are you a daily and a top end guy, or are you like just two top ends?
Do you know what? Yeah, the 2-car used to have a Range Rover. And when the company decided we're going down the EV policy,
yes.
the ESG and all that, I've had Teslas and now in the Lotus Electra. I would like to get back to the daily of the big Range Rover. Yeah, nice autobiography.
Big wafter.
Yeah, bit of kit on it. Do you know what?
What do you think to the Lotus?
I love it. I've done 40,000 plus miles on it now, up and down the motorway.
Really good looking car.
It does really, really good. Plummeted in value like most electric cars. Sadly, I should know better.
The man telling me how to orchestrate my finance agreements and raise more cars and free chefs.
We're going to have a bit of an issue in that when the final bloom comes. But we went into that eyes wide open.
Should have put the residual all the way up.
Yeah. Well, the funny thing is we've got 3 of them in the business. My 2 business partners have got them as well. But no, definitely back to the Range Rover, which would be the daily.
So you definitely have a range.
Yeah. And then, do you know, I've always been an Aston fan.
So you strike me as like a, like
shaken,
a
not stirred.
a classy, 007 man.
Yeah. I think Ferrari, if you're going to hold the value of the brand, but just a nice Aston,
Old school
DBS, Vanquish, something like that. Yeah.
Good choice. Good choice.
They've got. Have you seen the values of them now, though? The new ones.
Crazy.
Whew, yeah. Starts with a 3 and it's not 30.
It's not nice. It's not nice.
No, a
man of class. A
lot of money, but yeah, I think that would be the 2 doing around him.
Good. Okay.
But
regarding finance agreements, back to the point.
Back to the boring bit.
We've had our fun. Yeah. If I'm exiting, if I've got a car, but I've got a home, and I've had it. I mean, the one I've got a home, I've had a year and a half, give or take. I want to get out of it. How do I, and what steps do I take to get out of it in a way that I basically, don't have my shirt pulled off my back?
Yeah.
I know that is very vague. It completely depends on the car, granted, because ultimately, I guess, I would just, you're always going to get more money on the private market, right?
Yeah, you are. I think that the truth of this is, though, making sure you do the right deal at the start, rather than when you want to come out of it. So let's understand
something
it first.
I haven't got.
Let's get things sorted first, because we will always recommend what we call a regulated finance agreement, whether it's a guaranteed balloon or not a guaranteed balloon, because you're only charged 30 days interest to come out of it.
Okay.
If we have to go down a non-regulated option, which would be for a limited company or a high net worth individual, we will only put customers in a product that has sensible repayments.
So what is penalties. The non-regulated and regulated difference?
It comes down to the fact, regulated, you have the consumer protection.
Right.
So that's why a limited company can't have that, because it's consumer.
Yep.
A private individual, you can have the options of both. So you can have regulated consumer, which we do the majority of. If it's over £60,260, you have to sign on trade premises. So we will arrange that sign up, getting the techie bits now, but that's why you might have to do that. And it's worth doing that rather than thinking, oh no, I'll just sign by e-sign.
Yeah.
And there are people out there that say they sign on trade premises. If you've not signed on trade premises and you're borrowing over 6260, you could just walk away from the agreement. It's unenforceable. Lenders would hate me to say that, but that's because people have not done the right job at the right time. So we'll anyone in that position, there won't be many, but please do let me know. Non-regulated, limited companies, high net worth individuals, they can sign anywhere. So if someone's genuinely out of the country and wants to complete a deal, the only way we can do that is via non-regulated. So there are other reasons why there as well. And the difference in settlement penalty with the lenders that we use, 30 days with regulated, 90 days with non-regulated. However, the horror stories, some people have been put in non-regulated deals where all the interest is front-loaded on day one and they don't get anything back. That hurts. That is painful. Because if you want to settle after 12 months and you've got 4 years worth of interest,
you're in trouble.
Boom. Yeah, forget it. Forget it. So that's why I say very much at the outset, but we always guide with that. And most dealer products that dealers are using, they're PCP regulated because that's the easy thing that they sell from a compliance point of view.
So main thing would be just, and I can't stress it enough because I've learned so much already, but quite an upsetting amount actually, that just get advice.
Yeah.
Seek advice. If you don't know, and look, I'm someone that...
It's free.
Yeah, I look at that finance agreement.
I'm not a solicitor charging by the hour.
Yeah, I look at it and go, oh yeah, that's good, or that's not, or the monthlies are great, the monthlies are bad, whatever. I could be signing my life away into a non-regulated, like interest all up front. I would not know. I could not tell you.
It's emotion at the time because you just want the car. Sign the paperwork. I want the car. I just want that car. And I want the car tomorrow.
Yeah.
So going back to the original thing, 2 years through an agreement, you need to get a settlement figure. If it's a regulated deal, that is it. There's no negotiation on the settlement figure. And then it's going out there to market and giving the car to the dealership. Yes, they would like to have it and they might offer a sensible part exchange, but they will then look obviously making money on top of that as well. Yep. Depends what car you put part exchange in it against on the value. Silence check it. Have a look on Auto Trader. I know it's your favourite place.
It is.
Go on Auto Trader.
Do you know what? If
there's anyone what values are.
If there's anyone that uses Auto Trader more than me, it's George actually.
Okay.
He got me addicted. But
right. Well, typically on Auto Trader, if you're looking at that, take 10% off that value, and that's a rough idea where a trade value will be against what the retail showroom prices that they're trying to sell it for, and that'll give you an idea. But then also, We Buy Any Car. There's all these kind of places now where
motorway,
pop in your details, and they'll give you a value just as a benchmark, so you can sanity check where you are.
Yeah. Okay. Seek advice.
You might not always like it.
Seek advice. I can't stress this enough. People. Seek
go
advice.
And have a look.
Something that I should have done so long.
You keep saying this. We should have met 10 years ago.
I'm kind of upset that I've got a great relationship with Tim now, but ultimately he should have walked into my life 10 years ago. It would have been really helpful. But there you go. Briefly speaking about dealers then. Dealer versus broker finance. What's better? What's worse? You've been openly transparent in the sense of if you get a really good deal from a main dealer, you'll turn around and say, take it.
Yep,
absolutely fair enough. And I love that honesty. But ultimately, would you say 9 times out of 10, because I've had a car from a main dealer, the interest rate always tends to be higher?
It would normally be, but it depends what the actual
why
deal
is that? Is that just because they're a little bit greedy?
Just because the dealers want to earn a bit more finance commission in the overall deal. They think they're captive because they've got the car that you want, so they'll wrap the finance in it.
Wrap it all up in one. But
I think a lot of the time, let's go back to Auto Trader. Do you only ever just look at one car, or do you compare it to others?
No, I do compare it to about
why not compare your finance to others as well?
Yeah.
Exactly the same ethos there, where you're looking at it, and you'll go on to price comparison websites to look at mortgages and insurance a lot of the time to compare.
I think it's like safety and look, having this conversation and us speaking over the last year has taught me a lot. But I think I would argue that it's a safety net, right?
Yeah.
But for a lot of people, they go to a main dealer and they go, oh, I know that finance is real and I know it's safe because it's in the main dealer. Whereas some people might look, not to magnitude. You guys have been in the game for a long time. You might have someone look at magnitude and go, oh, I've got to do it myself, or they're independent. How safe am I? And I think it is just reinforcing that.
Trustpilot's a great place to start. Yeah. So if you are using independent, just check the Trustpilot scores.
Yeah.
That will often give a lot away. First and foremost as well, FCA regulation. We have to be regulated, which protects customers at the same time.
Yep.
And then there's all sorts of other data protection and things that go alongside that. So it's not as though we're just fly by night. You have to have the full regulation. If a broker hasn't, that's often a sign to go, oh, why haven't they? There'll be a reason there. But most are, because the lenders will only work with FCA authorised brokers at the end of the day. But we advertise on price comparison websites, direct. Obviously, I've got a team of salespeople as well. So we've got lots of the market covered.
Yeah.
But again, go back to, doesn't cost you anything to get a quote.
Yeah, reach
So,
out.
reach out.
Yeah, I can't stress enough. Use the calculator. Me and George ourselves have used it.
Yeah.
I mean, Tim's probably sitting in the office looking on the system, just going, "George's got a free quote. Tom's got a free quote." We have quoted so many cars using that calculator, and like I say, George was in London the other day, and it literally took seconds to do. There's nothing needed. It's just go on there, put your stuff in, and spit it out.
It's accurate as well. Yeah. There's a lot of people that are like, oh, well, okay, can I phone up and get a better deal? It's accurate. It gives the figures. Where you're looking at something more specialist that you might need something different, or if the system doesn't give you what you need,
ring up.
That's where you got to phone. WhatsApp, whatever it is. But yeah, if we can do it on the system and it's there, that's what we'll be able to do. It's it's not misleading. The balloons are not fictitious. They're all built into the lender systems. Yeah. So it is a great tool.
On the topic of main dealer.
Yep.
I've been I've certainly had the conversation with the main dealer before, where I've walked in somewhere, for example, on a Saturday afternoon or a Saturday morning. Really want the car. Just usual Dom, commit without thinking. And we can't get the funds quick enough. It can't go through. It can't. You have to pick the car up on Monday or Tuesday. I've actually walked away from a car because I was that impatient. Where I was like, well, I want it today. I'm not picking up Tuesday. It's just I'm busy, and usual.
You're one of those nightmare customers, aren't you?
I am absolutely probably the most horrendous customer. We'll catch up in a year, and Tim will be saying very different things about me. But if I was to go and get funded with you guys, is it a case of, can you get it as quick as some people? Is it a myth? Is it
I think it's one of those, if the stars all align and your credit is auto credit scored, we get the e-signs out, the dealer gives us an invoice really quickly. Yes, it can be done in a few hours. On a Saturday, unlikely, because a lot of the banks have skeleton staff. They don't have the full teams in place. However, what I will say there is, if someone does come and they're pushing, the chances are we would try and slow it down ourselves, because those are the people, the fraudulent deals, the ones that are pushing because maybe it's not quite as it all should be. And you go, hang on a minute, why is this so urgent? And
I can confirm, by the way, I'm not
he's not fraudulent. No, we'll give you that way.
I'm just impatient.
Yeah, but that's often why people sometimes will slow it down on purpose. Yeah. Just again to sanity check things. And everyone wants the car, wants to have seen it super quick. So we tend to say, if you're sorting something out the weekend, let's get you in it for the following Thursday, Friday. No worries there. Everyone's at their own pace, and it's typical. We can do it within a day. Not if it all happens. The bigger ticket deals, no, they can't, because the lenders manually underwrite things. We have to get documents signed and meet people. So they do take a bit longer. But I say to all my team in the office, so sometimes mistakes happen as well. Yeah. And we're not performing heart surgery. If something goes wrong, let's just be honest, admit it. Yeah, and 100%. A car might be a day late, but let's make sure it's done right. It's there. Right. Yeah.
Perfect.
Be patient. That's the one of that one, Dom.
Be patient. He's looking at me when he's saying that, but for
everyone at home,
be patient. I mean, look, a lot of real big, heavy topics ticked off there that, I mean, I certainly want clarity on. A lot of the audience at home want clarity on, which is great. We've got a couple more questions that have actually come in from the audience at home.
Great.
One of them is, what does it take to get finance? Is there a rough acceptance rate? Do nine people out of 10 get accepted? Do they not? I know it's a very
generic, but I think most people that do come to ourselves, because they're shopping around for rate, the rate savvy, that tends to mean that their credit's quite good as well, because they are shopping around. The people that don't shop around know their credit's probably not quite what it needs to be. We call them chancers. And they'll try and go with a dealer, or they'll go with an independent. And it comes back down to the fact that if your credit score's reasonable, and we are like A, B, C as the typical bandings that we work towards, it comes in and it will just auto score. Those are the good ones. So we do have a high acceptance rate. Yeah. We also then have a high, we call it a conversion rate, because people are coming to us for a reason, because we've got a good rate and they want that car. So if we agree it, chances are they'll go ahead as well. That's what the lenders do like.
Ultimately, make yourself as attractive as possible.
We've talked about the profile building.
On paper. And
bank statements, if we need them, make sure they look sensible. Yeah. Even
no silly references.
Do you know what? I know social media is key out there, but sometimes they check social media accounts on people.
This was going to be one of my questions.
Okay.
Do lenders specifically, on the topic of modifying cars that we spoke about earlier, right? I go and buy, we'll use the car we referenced earlier, a G80 M3, and I do some absolutely outrageous wide body kit, completely, against the range of the finance company. Have they been known to search up Dom and have a look and go?
Not necessarily directly like that. However, if something goes into the press, and I think a really good example of this is the high-profile footballers, and we do quite a lot of footballers. They get done for drink driving, caught for speeding, smashing the cars up. As soon as there's an association with that person, that goes on the BBC website, whatever it is, and the lenders look at that and they go, hang on a minute, that car's ours. So they then need to confirm the insurance. They want to confirm what's happening with it. Has he been banned from driving? So it might not be something that you think is relevant now, but then next time when it comes round, they just do a Google check. It's so easy.
Yeah.
And something might crop up and there might be something that goes, actually, we don't want to lend this guy any money. And you go, why? He's got all this money. And we had one guy that, smashed his car up on a track and he had signed a document to say he wouldn't be racing his car on the track.
Oh.
So
you hate to see it.
You do. Be honest. We'll tell them if you are, you are. We do fund proper race cars as well. Different unique funders that will look at those. But you've just got to, again, apply that common sense. Everyone Googles things these days. Yeah. So if you're ragging your car on social media and you've said, actually, I'm not going to be using it for track purposes, be prepared.
Catch me at the ring. Catch me at the ring. Okay. Age of cars. Big thing.
Yeah, good one. Yep.
With PCP, like all of my past finance agreements have been PCP, I believe, off the top of my head. What is the age limit on PCP deals? And ultimately, do you fund and can you finance cars, which I know we briefly spoke about older cars being specialists, but is there an age limit?
Yeah, so do you know what, most PCP, generic rule, we've got 5 or 6 different lenders, up to really 10 years. 10 years of age, that will, some might go to 12, but if we say 10, that covers most of the bases of the age of the car, because they're thinking that they're putting a guarantee on these to buy it back. After 10 years, what is the true value of that car? They don't know. The other thing, mileage. So once it ticks that 100,000 miles, that's something else that does scare them, because how long is the car? We know it'll go longer than that, but it's just in their mindset. If you're doing straightforward HP, which is where you just pay it over a straight term without a balloon, tends to be up to 15 years, so a little bit longer, which works. But then if we're going into more specialist products, there is no age on it. So we've done classics, lots of, after quite a few DB5s, fortunate to write those. Awesome. So,
interesting to know. I was
1950s, 60s kind of cars.
I was always under the impression that like PCP was like, it's 4 years old, I can't do anything else. And if you found a car that was good, and probably it goes on to our point that we spoke about earlier about buying the right car instead of just, doing a Dom or a Jordan, going on Auto Trader and going, I need it now. Yeah. When in actual fact, the right car might be slightly older and you can actually get it funded. It's just...
It comes to that down to the profile of the customer as well. So if you're a 21-year-old looking at buying a 20-year-old car, the chances are it's not going to happen. If you're a 40-year-old that's got your own business and you're buying it for a reason, yes, we can have a look at that different story, because it's a different kind of underwriting that will look at it, and they're looking at the person as well as the car.
Okay. On the note of funding old cars, new cars, whatever, is it only cars that you do? Can you fund bikes, boats, planes, dare I say it, whatever? Do you do a lot of stuff?
We don't do lots of it, but with the lenders that we've got, because they're commercial lending partners, we can fund boats, planes, different organisations, because a lot of the time, I brought my documents to sign you up on that as well. A lot of the time, boats.
Watch out, we're
going to come away with some big commitments today, Dom. But these things, boats, planes, they're often registered in different countries, so it's a lot more specialist, and almost like marine mortgages. So it's rather than a finance that we're used to, they put a mortgage, applied that to it. So longer terms, but then going on from that, we can fund machinery, equipment, HGVs, obviously LCVs, commercial vehicles, anything like that. And believe it or not, we can even fund cows.
Cows?
Cows, as in moo.
You fund
I've got you now, haven't I? Yeah, we have a lender out there.
I love the way it says, believe it not.
Yeah,
we can fund cows.
There we go. Yeah.
What?
So yeah, dairy herds, because they're income producing, they're assets. So farmers can fund them.
That is crazy.
It's done.
I am putting it out there right now to the team that are hard at work currently. I think we need multiple cows, cattle,
blue cows,
anything. Want them in. Unreal.
So weird and wonderful. Yeah, Jordan up for that one. Yeah, he's learned. He's Farmer Jordan.
Yeah.
So. That's an odd one, but it can be done. So that just shows most things can be funded. The actual thing is, it has to be movable, identifiable, definable, and sellable. It's the four key things. Yeah, I said movable.
Yeah, nice. I like it. This guy,
don't put that in.
This guy has jokes. Really interesting though. Look, I think it is one of the main things to take from this.
Yeah.
Yes.
We won't do a house though, because it's a mortgage. That's a mortgage. That's a different kind of funding altogether, even though it's an asset. But that technically, you can't just move a house up and sticks, and it meets all the others. Well, yeah, but static caravans again, because they're actually often on parks that have title to the ground rent.
Yes.
It makes it more complicated.
Makes sense.
Yeah,
makes sense.
Yeah,
But
we're getting deep into this now. Let's go back to cars.
This is interesting because look, no one, I don't think. Look, there probably would have a few people at home that would know, but all of this stuff that we're going over is just stuff that we would have never have known. And the time that it would have taken up to research all of it and take it in, when people can just go on social media.
I've got a lot of useless stuff in here, haven't I?
Honestly, it sounds like it, but there's some stuff in there that is great. I think the final question, which I think we briefly spoke about off camera, because I queried years ago about porting my mortgage. If you don't know what that is, it's basically when you pause your mortgage almost and move house and they carry it on. Loads of complicated stuff. Can you do that with a car, with car finance?
Yeah, no, good question, because ultimately you've got the finance and you just want to move it to the next one.
Yeah.
You can't, sadly. And the reason for that is that the car finance is against the asset itself.
Okay.
So there's a register against the car asset.
Sense.
So when you sell that car, we need to move that. So we have to clear it off and then start again.
Makes sense.
Yeah, and often there's things like deposits and stuff that need to be done. And
whoever asked that at home, apologies, but that's the truth.
Yeah, just new agreement.
But hey, look, that is us wrapped up. I think everyone at home should now have so much more knowledge regarding car finance. Don't do a DOM. Don't be impatient. Get advice. Yeah. It's free and it is quick and easy. It doesn't take a lot. WhatsApp, Instagram, however people want to. I'm quite open replying to those.
Reach out. Dead easy. Reach
Tim
out
is
to
very
us.
easy to get hold of, and his team. 100% reach out if you're querying moving your finance agreement, or look, you might have just gone into a main dealer.
We do refinance as well. So if you have financed at 13.9 APR and you want to look at options, again, we can look at that. Which will only help.
Down to a lower rate.
Refinance. 8.9, 9.9, whatever it is at the time. So we can look at that depending on the lender.
Perfect. Well, look, thank you for your time.
No, great to come down and see
I feel
Gravity
like
HQ.
My head is now so much bigger with knowledge, and excited to do the next one and just keep educating people and going from there.
And we're going to be at the show, aren't we? So Stan, looking forward to that. Come and say hello.
I am very excited. I think we've got a big year of educating a lot of people. The do's and don'ts of finance as we've gone over. And really just minimising the amount of people that are making mistakes, because that's all we care about. We want to save you money, of course. Tim, wants to save you money and do business with you. But ultimately, there has been in previous years people making mistakes that just are not needed.
I think also it's probably worth just highlighting that we've joined as a partner with Gravity. We're not paying you commission for deals that are done by the customers. So it is completely transparent there as well.
It's not
that kind of push. We're here to help.
No, exactly. It's not about the money. It is a strictly educational piece of, we want to look after, and more so Tim, approaching us about it, looking after the community of, especially of car enthusiasts, right?
Absolutely.
Like I say, going back to that point of when people finance cars that love cars, it is more than
journey.
just financing an asset. It is you know, at some points it's their life, you know, before they get a house, after they get a house, whatever that may be. So really good opportunity just to help as many people as possible. But yeah, really exciting. Thank you for coming down. Appreciate
thanks for hosting.
All the knowledge. And hopefully I don't forget any of it. If not, me, you, everyone at home will just WhatsApp it.
Remember, don't be a dom.
Don't be a dom.